as we mentioned, we are going to be diving into the crazy, ever-changing lending world, and I thought no better than the expert in the lending industry to have come share what is going on right now in the lending industry other than Matt Atkinson. So Matt, I'm going to dive right into this. What would you say are the biggest changes in the lending world right now that you've seen shaken up everyone's ability to, not everyone, a lot of people's ability to get a loan?
Yeah, it's shaking up everyone's ability. I'm actually doing a Facebook Live video while we're talking.
Awesome.
So they can see how amazing my hair looks the week after, and then know how your hair looks so good. You're wearing a hat. So a couple tips with lending. Man, a lot has changed in the last 45 days. And just like when we need to get a haircut, we wanted to role play examples of what happens to sheep. Well, you've got to cut sheep's hair, because if not, it gets super shaggy. And then Yoshi is such an amazing artist. He's like Baby Yoda right here. Baby Yoda and Yoshi is just priceless. So with mortgages, there's so much changing. We're not going to sure if we're going to be able to execute Order 66 like in Star Wars Revenge of the Jedi. I just watched that, or Revenge of the Sith yesterday.
Oh, nice.
So yeah, so some different tips with that. You guys, I love Star Wars. I love looking good. I love Yoshi Shiraki. So you guys can listen to this if you'd like some more. So a couple tips with that. Number one, all of the non-conventional loans, like bank statement loan programs, alternative lending, they all went away like a month ago, like within 4 days.
Jeez.
Crazy quick. Jumbo loans.
Like on a Sunday.
Yeah, how about, did we do the radio show like the day before that, or was it after?
I think it was after.
Okay, so actually the day after the radio show, there was the Fed fund rates, they dropped the rates to 0, and they already had a scheduled meeting for Wednesday. So you knew that things were already happening if they had to reduce the rates to 0 on a Sunday, because they just needed to get some more fast offerings in there, right?
Yeah, exactly.
So knowing that they dropped the rates to 0, what happened is the banks, all the non-conforming, which is like a bank statement loan or an alternative lender, all those went away like within 3 to 4 days, like gone.
Wow.
And no one's talked about it back then because everyone's focused on these 3 things first. Number one is obviously COVID-19. Yeah. Like it's now hashtag COVID-19. Like that's the theme for 2020, right?
Yeah, yeah.
So COVID-19. Number 2 is the volatility of the stock market. Mm-hmm. So everyone's super been concerned with that. Then 3 is the unemployment or job layoffs. Right. So different from 2007 to 2008, everyone was talking about the economic crisis because the banks or financial institutions went out of business. Right. But that took like 12 to 18 months. Yes. And until Lehman Brothers went out in either September, October of 2008, like if you were in mortgages or if you were buying a house and you were able to close, you didn't really pay attention as much. Right. But if you were like a real estate professional and you're like, holy cow, I bought my house, I'm so excited to move in, get my keys on Friday, and that bank closes down, and you're like, what, WTF, right? Yeah. You're like, what do we do next? And literally, you couldn't really do anything if your contracts expired. It was an amazing time for me to be a lender, and my team right now kind of like makes fun. They're all younger as an experience. They're all 5-6 years or less. But I'm like, look guys, I've already done this rodeo before, and they're like, wow, yes, you actually know what you're talking about, Matt. It doesn't happen that often, okay? Right. So the second thing with the jumbo lenders, those are loan amounts in Salt Lake County over $600,000, $400,000, or that's considered high balance. Now those loan amounts change from time to time. You can contact your local lender, or you can actually Google that if you're interested enough. So those have decreased. Then the following week, actually all government loans, so FHA, VA, USDA. So FHA stands for Federal Housing Administration. It's a very common loan program that you only have to put 3.5% down. VA stands for Veterans Administration, and then the USDA, you think about meat, but it actually stands for United States Department of Agriculture. So more when you get financing in rural areas. Got it. All 3 of those loan programs either offer no money down or as little as 3.5% down. So not a lot of money into the deal, right? Yeah. They changed guidelines because of liquidity problems. That there's a servicer called Ginnie Mae. So you have Fannie Mae, Freddie Mac, Ginnie Mae, and then Sallie Mae is for student loans. And they should actually call it Matthew and Yoshi, or Yoshi Matthew, for entertainment for K-Talk Radio 1640,
Right.
the home show.
Yes.
So there's about a week that if you had a loan, a FICO score below a 699,
Yeah.
it literally cost 8 points
Whoa.
to get a rate. So basically, there's no one could get financing for a week.
Yeah.
Or how about very limited? That's gotten not as they've worked that out to be able to have people get financing. I work at Intercap Lending. I'm actually wearing my Intercap swag today.
Nice.
At the bottom, you guys can check that out. Or if you guys are just listening, you can check me out and then check out Yoshi and then you can check that out.
Yeah.
But I think all this happened like literally 10 to 14 days after we did the last radio show. So here's what's good. There's a lot of good things. One is they're making measures quickly to help prevent having people be in bad financial positions. Okay. Now it's a little more work for mortgage professionals, but like right now we're actually having to verify a lot that people who are self-employed are able to still earn income. Because the last thing they want to do is they don't want someone to close on a house on a purchase and then be in a default and be able to foreclose like in 6 to 12 months, right?
Right.
So that's happened. Another thing that's been really strict, which is good, it's just extra work, is they have forbearances. So basically, your forbearance, here's what's happening. You can file for a forbearance. It only allows you to defer the payment for 3 months, and you're still going to have to make the payments.
Right.
So, like, here's my comment. If you have the financial capability, I would encourage you to make your payments, because we're not sure how it's going to show up after, because this has never happened before. Okay?
Right.
So normally what happened in 2008, 2009, during the last market correction, is people wanted to be fiscally responsible and make, like, say, hey, look, lender, I have a job, but I can't afford this payment any longer, or I want to be able to refinance because rates are lower. Can you please modify my loan, which is different than a refinance? Mm-hmm. And those departments would say, no, you can't modify until you miss a payment. So you had a perfectly good borrower who was like, okay, well, I want to modify the loan.
Yeah.
And then they required you to miss like 3 payments, and then you had a notice of default, and like one part of the department was not talking to the other part of the department. So you had 2 things happening. One, you had a short sell package, which means a realtor is trying to help you sell the house for less than what you owe because now you have a 120-day late. And then you had the loan modification department that was trying to communicate, and you're turning in financials to communicate saying, hey, look, we don't want to own your house, but yet you haven't made these payments. It's going to go on the back end of the loan. And unfortunately, because it was new, we never experienced that before, there was a lot of homeowners who lost their homes because of different economical situations, also values going down, and then also they just wouldn't talk to each other, so we had a lot of inefficiencies for lending and real estate at that time.
Got it.